how things may have changed with this involvement of the U.S. in the Middle East and what's going on with it. I'll just call it a Middle East conflict right now, because I have no idea if this is a precision operation or if it's going to be an ongoing war. But my guess is that the U.S. didn't go in to liberate the Iranian people.
Yeah, it's certainly is not a 4-day event like we were kind of told. And I think it's going to have, profound impacts on the way things move from now on in terms of the way that the United States is viewed. I mean, we could start with, Trump came out and said numerous countries have told me that they're all on their way. Some are very enthusiastic about it, he said. But as far as I can tell, there are 0 countries on the way. In fact, I've read recently Germany and Spain and Italy ruled out taking part. Japan said it had no immediate plans on joining. Australia said it, was maybe considering joining, and that it was not planning on sending any Navy vessels. Britain and Denmark, same thing, that they would consider, that they might help. They were all talking de-escalation and avoiding being dragged into a wider war. France was the only thing that I saw that said, a public yes, and it said it will probably help. It's interesting, Kyle, because 20% of the world's oil and liquid natural gas flows through the strait. People are talking about oil, but liquid natural gas is one of the critical ingredients to making fertilizer. You're talking the potential for famine if this goes long enough. You got Washington talking about escorts, right? They're going to have the Navy escort ships through. You have insurance companies say, I'm not going to insure that crap. You have the government releasing more oil from the Strategic Petroleum Reserve that Biden nearly, emptied.
Right.
It can buy time. It can't reopen a choke point. But to me, the irony of all of this, which is the craziest part, is and it's brutal. We go into Iran, and a lot of people think that was our way of kind of, putting a leash upon China, right? Getting them to heel, if you will, because they get a lot of their oil from Iran. Yet it's interesting that Iran is letting cargo ships go through if they're paid for in yuan. Russia is still finding buyers, and the West, they're getting inflation. And I think that's vulnerability exposed, Kyle. I mean, we can project force, sure, but we can't secure the most important energy artery on the earth. I think what's happening is that markets notice this, allies notice this, adversaries notice this. And I think this is kind of the interesting part about it all. We went there for whatever reason we went there, it seems to be not going to script. And the longer this goes on, expect much, much higher inflation, as anything that you touch, anything around you and I in this room right now, in your room, oil touched it, whether it be the clothes on your back or the set or the computer, oil touched it, either help make it or get it to where you're going. So where it's going to the end user. So yeah, I think this is something that could very well turn into something much, much bigger. I mean, I'm hoping it's not World War III, but much, much bigger in terms of the way the world, I think, de-dollarizes and looks to the United States once as a country standing atop a moral high ground that right now has trampled upon it. And I think we've been knocked down several pegs in the way that the world looks at this country now. So not a good thing, brother. Not a good thing at all.
Yeah, it hasn't been. I'd like to now to just speak about the economic. We did a little bit from, as long as the Strait of Hormuz is closed, then we have this kind of, one could say, transient inflation. But war historically has, usually when it breaks out, you get some sort of knee-jerk reaction followed by what seems to be kind of good things for markets. Can you set the stage right now for what we're looking at here with, let's say we have this kind of ongoing conflict in the Middle East. I think we're spending about $900 million a day on it. Then we have new Fed chair coming in a couple months here or less. And we also have this debt that's about to roll over pretty soon. I think that's like 10 trillion that needs to be refinanced.
Trillion. Yeah.
So what are we looking at in the next 3 to 6 months here?
Well, it's that's the tough one. I mean, and you can throw into it, I think, loss in confidence and rising yields. And this is where it gets serious. You have rising yields right now, which is something that I don't think that they're really very happy about. And you're seeing that on the 1 year, which is usually the precursor, kind of front runs where things are going. And so certainly they're not going to have any aspirations, I think, of lowering rates. But yeah, I mean, look, you have record liquidations in right now in the stock market. Last week, what was it? It was March 3rd through the 10th, so it was 2 weeks ago. You saw record liquidations. Institutions sold the most S&P futures ever, ever. And that number, what was that number? They sold 36.2 billion worth of S&P futures, the most ever. You have private credit that was sold as smart, sophisticated lending outside the banking system, and much of it during the cheap money era. We saw great returns on the way up. Everyone thought, geez, I got to get into private equity with BlackRock. But now we're beginning to see the hidden fragility underneath it. It was sold with quarterly redemption rights, but that was only the case if not everyone stood for redemption at the end of the quarter. And to me, when you start to see a giant like Blackstone or BlackRock limiting redemptions, this is not nothing. This is the sort of signal that tells you liquidity may not be where investors thought it was. I think the irony to all of this, which gets me the most nervous, is that even though this is called private equity, in almost every case, the banks are still exposed because banks lend the money to the funds that make the loans. So if this starts to unravel, it does not stay neatly contained, would be my guess. So, there are a lot of potentials that, whether it be in the equity market, rising yields in the bond market, a prolonged inflation that could spiral, rising yields and all of the valuations that are inversely correlated to a rising yield environment. And then you got to ask yourself, who the hell wants to take our treasuries to fund this kind of war? We've seen a lot of countries over the last several years sell treasuries. So who is the buyer of last resort? Is it the Fed? Do they come in and monetize? All of these things are potential, I guess, become more and more dangerous and thought-provoking as this conflict continues and drags out. So I guess we'll have to see how long it lasts. Trump is already starting to backpedal a little bit, I think, as he sees that maybe this isn't as easy of a deal as he once thought it was, but I guess we'll have to see. But look, 1 year U.S. Treasury, which moves in anticipation of these inflationary expectations, to me suggests that bond market has removed all expectations of any Fed rate cuts. And so this is already going to start to have reverberation. But one other thing that I think is important is that, there is this reliance upon, the United States is deeply dependent on China for rare earths. And these rare earths, which sit deeply inside of the advanced weapon systems, while at the same time we're burning through munitions at a level no one's ever seen before, and it raises serious questions about supply and replenishment and military staying power. And you would argue this is not a normal position for a superpower. If we're becoming you can see Trump is trying to rectify this, but if we're dependent upon China or other rivals for critical materials, this is no longer just a supply chain problem, because in a world where dollars are beginning to buy less trust, hard assets matter more than anything. And I think that's an interesting take on all of this. And, there is a rumor. Now, I don't agree with the rumor, okay, but we see for three out of the last 4 months, our trade imbalance has gone down with the largest, or pretty darn close to the largest export being gold. Now, some people are assuming that this is the United States, that China is demanding it, like in World War II. When we said we would help, but we wouldn't take the pound sterling. We would only take dollars or gold. And it's kind of like during wartime, people moved to gold. And so, but the point I'm getting at is that this is all over the place right now. People are asking me about it, and I'm not sure if I believe that, because what you end up seeing, it could very well be, all of the gold doré that we have been taking out of Venezuela. Could it be that gold doré is being sent to Switzerland for refining? It would show on the trade numbers the exact same way. It would look the same, right? And you can't tell just from the export numbers that is indeed trade and settlement in gold through China. But if that really is the case, if China says, look, we'll sell you the rare earths, but you're going to pay us in gold, that has some serious implications, not only for the dollar, for the Treasury, but what does it say about gold? Do they want gold to go much, much higher in that case? For years, high gold was the antithesis of the dollar. That they tried to keep it low because it was the opposite of the bond market and the dollar. But if we're actually paying countries like China in gold, why is it showing up as big exports? It's either refining, which I think it is. If it's not, God help us. It's the beginning of some very big problems for this country in terms of what it means for the bond market and ultimately the world reserve status.